Hello, everyone. It's been a while. How we all doing? Hopefully, you guys all had a great training week last week, a great weekend as well. I haven't been gone for this long, but it's been a while still. So, hopefully, you guys are all doing great. Hopefully, your trading has been going great. I'm not gonna lie, I believe I could not have chosen a better timing to leave for vacation on that contract rollover week. It seemed pretty hard. So hopefully none of you guys got hit too hard. How was Vegas? It was amazing. You might hear it from my voice though. I am dead inside currently. It was really fun. Definitely appreciated it. And it is not a vacation to repeat too often. Let's just say it like that. But it was very, very fun. Now, to get back to trading a little bit, I mean, from our daily chart, we see it very easily. Um, Technically, last week was great, right? Technically, I know I traded Monday and Tuesday, and I mean, I did pretty good on those days, even without news, which was great. But then the rest of the week, I mean, technically looks great, right? Wednesday retracement, Thursday continuation expansion, all the way to all-time highs. But the delivery was just not on cue, right? Even just going down to the 15-minute here, and let's bring like 7 days or something on the indicator just so we can see. I mean, even on the 15-minute, it looks kind of good. It's just been a lot weirder, or is it just me? I mean, I was looking at the 1 minute for the previous weeks, and it was looking pretty bad on the delivery. I mean, we can see it a little bit here, but even then, you had some pretty decent trades. This was a little bit harder for sure, a lot of high resistance. Overall, from what I saw at least, it seemed like a little bit of a harder time trading last week. But you guys don't have to worry about that anymore. We are here to review today. And as we see, we took out previous day high and basically retraced a lot, right? So we went a decent amount higher to finally just fully reverse the day and actually close out very near the opening price. Now, day before FOMC, is that to be expected? Not really, if I'm being honest. But what actually brings this to my attention is what we would call a contract rollover gap. What is that? Well, it is the gap that we see in price between contract rollovers. So as the contracts are actually getting rolled over, and by that I mean the open positions, the open interest of said contract, it heavily affects price. So when we actually do have our official rollover, right, which was on the 15th, by the way, contract expiry was on the 15th, well, we tend to see a special gap. And as you can see, I turned off BADJ, which adjusts for contract changes so that I can see that. Now, of course, I will be bringing that option back. I do utilize that option whenever I'm looking at the continuous contract, right? Which in this case is NQ1. But now these levels are of big importance to me. There are a contract rollover gap. I want to take continuations off of this and frame reversals off of it as well, just like any sort of mitigation level, just like how I use specific opening prices, for example. Now, overall, what was my expectations for the day? Well, we're trading at all-time high, guys. And if we did have a weekly outlook this week, by the way, I came back on Monday morning, so no time for a Sunday outlook, right? I would have told you guys what I told you guys many times before. Every time we're trading at all-time highs. When I'm bullish, trading at all-time highs, I'm bullish until proven otherwise, which means I'm going to keep trading higher and framing any lower movements as a retracement and not a reversal until I get my confirmation, for example, invalidating an on-side array. Now, that is a great way to look for that. So, for example, invalidating this order block on ES would have given me, after today, a nice confirmation to look for shorts, look for possible reversals or higher time frame retracement. But we did not get that. So up until that point, I'm still going to be bullish. Now, let's just go in replay mode here so we don't have to mess up the indicators too much. I will remove these levels for now, but just to tell you guys that I am using these as higher time frame points of interest going into the next week. Basically using all of these boxes as a fair value gap and all of the specific levels as mitigation levels. Let me actually just remove opening range. And this is a great example actually to highlight a tool I've been using, right? This is session ranges by Statistics. Of course, it is our tool, but I've been using it to see the current day's high and low. And it is such a simple implementation, but it works great. And I mean, anytime I can save time drawing on my charts, I love to do it. So you might have seen Asia is now pinkish. I'm looking for a color. Definitely will have to switch it up. Actually, I am doing it now. Let's try teal here. Anyways, I'm going to be messing around with some stuff. But as you can see, from 6 p.m. to 9:30, I want to see the current day's low. This is what I call this. You can call it a half day. I don't even know what this marks specifically, but it marks my overnight high and low, and that's what I always frame as current day's high and low. So if you guys are interested in that, of course, you guys know where to get the indicator. All the links are available in this Discord or anywhere really. I do jam those links everywhere, but you can go to our website. But I just wanted to showcase that for the people who do use the right statistics indicators. This is how I got these levels. Now, enough rambling about that. Let's talk about today. Overnight, we expanded higher. Did we form a high probability low of day? What do I need for that? Well, I need multiple things. I need price to expand in one direction and return to the daily open. That is a check. We do have that. So we have one of the criteria needed to consider this a possible low of day. But we have one more criteria, which is the most important criteria, which is SMT. There's no SMT at all. Moreover, a thing that makes this even worse for a possible low of day are these equal lows. So if there are equal lows, but there's SMT here, with ES, for example, taking out this overnight low, then in that case, I am very confident in saying, well, price does not need to return there. Doesn't mean it won't, but it means it does not need to, which means for myself, I got to look at something like a retracement continuation. But we did not do that. We formed relative equal lows on both assets, which allowed me to frame shorts at the open. Now, my confirmation of that bias, since we had already expanded quite a bit higher, right? If I am to frame this whole move higher as a manipulation and then look to distribute lower, right, to expand lower, well, I need a confirmation at the open. My confirmation came in the sense of we formed SMT at our 8:30 news right here. This is where we had news. We had 8:30 news. Don't remember the specific news, but it wasn't any sort of important news. But once we form SMT at the news right there, then now this is an important level for me. I don't want to see this level broken. So as soon as 9:30 open broke it, invalidating the SMT and invalidating the SMT with London low that was formed 15 minutes after as well, then in that case, I am extremely bearish. And if we go down to your 1 minute, and we look right at the open, and now I think I've showcased it in a Pierre review a little bit ago, but I actually use 5 minutes before the session so that I can see SMT, not SMT, sorry. So I can see breaker blocks that are formed just a little bit before. I do the same with my SMT indicator, because even if the breaker's formed at 9:29, then the unicorn entry could be at 9:30, and that is exactly what we saw today. The 9:30 candle invalidated the SMT we were talking about and retraced into a bearish unicorn, which would have given you your setup. Now, for myself, I don't like entering trades at 9:30. I've talked about this quite at length. It's really just due to the volatility. So I'm either going to miss the trade because I don't want to get slipped to hell and have a horrible entry, for example, which it did happen to me, or get slipped out because price does not even go close to my stop loss, but it just stops me out because it gets randomly filled. A lot of weird stuff happening when there's this much volatility, right? This much incoming traffic to the markets, if we can say it like that. So I either wait for the next minute, the next candle, pretty much. I wait for the 9:30 candle to close and see if 9:31 will either give me a re-entry at the same level or give me a confirmation. For example, if it started expanding past the low of this candle, I would have definitely taken this trade. It did not, but it did retrace higher into this fair value gap, which did offer me this trade. Now with this entry, you have your fair value gap as your first PD array. You have the order block as your second.
And then you have the invalidation point of the breaker block, because as you can see, you don't have an inversion fair value gap to have as a third PD array. So your stop is all the way up at this swing high. And if we look a little more closely, you can see there was also SMT that formed at these highs right at 9:30. So it was definitely a very nice confirmation. Very, very happy to come back from my trip to a win, right? And I'm not going to lie to you guys, a pretty easy win after the fact, because I didn't have to trail anything. I didn't have to manage anything. The only point where I had to be careful is, as you can see, Asia low was taken on this candle here on ES. So there was now SMT to be formed. But as you can see from the risk to reward, we are already pretty high up in there. And I personally had already taken profits. Where are my standard deviations? Let's bring those in. You know, when I'm using the indicator live on my chart, I like using the deviations directly from it, in case you guys are wondering. But when you're using it in replay mode and you're showing so many breakers, as you can see, your charts can get pretty clouded. But when I'm using it live, I am actually only looking at the last 3 breaker blocks, and I am removing them after invalidation. So I just want to showcase this to you guys. For example, this morning, I was looking at something like this, and even then, this is pretty big. Sometimes you might want to go down to 1, just show me the most recent breaker, historical, or just show me active breakers. Don't show me any of the old ones. And then now all of a sudden, well, let me just remove these deviations. Now all of a sudden you have something very nice, and you can even not extend them at all. And now it looks a lot better. And then even if I bring it up to 3, this is something I can look at, right? It's not clouding my charts. So I just wanted to showcase that. I saw a question on YouTube about that. So thanks. Sorry about that, guys. I think it was a great time to actually address it. Now, I do want to bring them back. So give me my breaker blocks back and remove my deviations. Just wanted to showcase that to you guys. But now I'm drawing them by hand. And as you can see, 4 standard deviations to align beautifully with current day's low. But as well, 2 standard deviations gives you a very nice 2.91 R. And it got hit very quickly. Was definitely happy to take profit at this level. The main take profit level, though, was current day's low for me. And after that point, I did leave a 3 contract runner. As you can see, it did not offer very much more upside. Sorry, is what I should have been looking for the word. And as you can see right here, we did form SMT at these lows. So all of this run lower, although it was high resistance, I still held through because it didn't give me any reason to get out of this trade. And I even trailed my stop. I believe I commented it in chat, like all of these highs where I trailed my stop. You can move the floating toolbar in the bottom if desired. If you mean by this, yes, I do know. I can bring it here. I can bring it here. Truth is, I like it up top. I just move it whenever I want to go in replay mode, because I never do go in replay mode. I don't backtest using replay mode in TradingView. So yeah, it's always up here for me. I do understand it might be a little easier for you guys if it was always down here and you can see everything, but I don't like it. So you guys will have to ensure my personal choices as you get these free reviews. Sorry, guys. That's how it is. Hopefully it's not too much of an eyesore, though, truly. Doesn't bother at all. Thank you. Appreciate it. Yes, just to get back into it, I think I've mentioned it a few times before, but how I trail my positions is very simple. I look at ranges, and not necessarily for premium and discount. So let's actually just use a random box. I look at a range offside to my trade. So for example, right now I'm short. I'm looking at bullish ranges. And as soon as we close below, in this case, the low, so the extremity of my range, now my stop gets trailed here. This is how I trail my stop loss. So now, as you can see, and I'm not looking at tiny ranges that are formed with 3 or 4 candles. I'm looking at ranges that are formed with at least 10 candles. So that lasts quite a while. For example, this range, as soon as we close below this low, now my stops get moved to the high of that range. and so on and so forth. So if you look using this logic, you'll notice, hey, here's this range. And then we closed below it right here. Let me be precise, close below it right here. So now let's actually just do like this so it's a little easier. My stop gets moved here. And then we did form a range here. It was quite a small range, but I decided to use it. So as soon as we closed below that range, now my stops get trailed here. As you can see, it is a pretty good trail. Now, is it the best trailing option? Maybe, maybe not, but it's the one I've always used, always found no issue with it. And actually, this is what runs in most of my automated strategies because it allows for the most potential upside in regards to that. So depending on your way of trading, this might be helpful to use. I did want to showcase it a little more in depth than I usually do. Overall, I held this trade. When I saw the SMT as well, that got formed. Where is it? Right here, right? So as you can see, this is the low on ES, and on this low, it was actually higher on ES. So we formed SMT at this low. Let me just do that. And that gave me a nice indication to get out. I still had a final contract in this position that got stopped out on this run higher afterwards. I didn't want to leave a final runner in this case. And if we look at the PM, we'll actually notice that we had a lunch rate. So even though you had a short in the morning, would it have been high probability to look for a short in the evening? Well, your main objective has already been met, but then you have a framework that appears, a statistical framework. So in that case, definitely, this is definitely a good short. As soon as lunch high gets taken, your objective is now lunch low, right? That is your statistical range framework for the PM session. It is based on the lunch rate. If we just remove all these breakers, because it was a late lunch raid, let's just do 445, 245, just so we don't see these useless breakers, which you can't trade because you don't have any PM framework as of then. As you can see, very simple. We formed the breaker block at 310. It was a power hour trade. I took this personally, and it did not work out. Well, now that I look at it, I could have had my 2R, and I'm kind of pissed. But if you see this, I'm always talking about it. For me, relatively equal levels, right? So equal lows, equal highs are very clear objectives. If we look at this and you look at your entire range that you're looking to reverse, you have a beautiful discount and efficiency right there. And if we head over to our 5-minute chart, you'll notice that this is actually, well, technically not your first discount. Your first discount would be even higher than here, right here. But this is all low resistance. And so I was expecting to be able to take a partial at this level. I would not call it greed, even though there was the opportunity to reach to R right here. Personally, I don't see any issue with holding out until 2.97, and that's actually how I established my partial. Also gaining the opportunity to reach 5.5 R. As you can see in this case, it did not work out. For me, this was a break-even trade. Why? Because I noticed that I was up quite a sizable amount. And what goes on in my head at those points, right? I think we've talked about it multiple times before, especially when there's SMT, right? So as you can see, this low that was my target actually formed SMT on NASDAQ at this exact moment right here, which almost formed the low before you would have gotten stopped out. Is it worth it to take profit? And in my book, it was not. Why? Because I'm on low risk currently, right? Just got back from a big trip. I want to get back into it slowly. I don't want to make a big mistake that will cost me an account, for example. So what I'm doing is going low risk. And in that point, take profiting $80 was not worth my time. That's the truth with you guys. It was a purely return, a purely money-based decision. So in terms of return, I would have definitely looked to take profit here, right? You have your 4-hour open, which is your 2 p.m. open. You see there is SMT and that formed right here with ES reaching what would have been your objective. So in that case, it's a great opportunity to take profit. Since I could not take profit, I decided to go break even and actually got stopped out break even there. Would be greater than 2R. I think the stop would be lower. Actually did not even look at the stop. I just placed it. So let's look at it. But I believe my stop was all the way up here. So you have inversion fair value gap here. This is not yet a fair value gap. And then you have this inversion here. Is this a tiny fair value gap? I think I missed this if it is. So let's look at the low of this candle. It is 24,553.25. And right here, the high is 553.25. So there is no fair value gap. Their stop would indeed be all the way up here. Your 3PD arrays are inversion fair value gap, and then inversion fair value gap again, and order block. Maybe on your contract, maybe on micros, your stop would have been different, and that's great. 3PD arrays is always the stop I'll go for, no matter what it shows on the main asset or what. It is dependent on the asset you're trading. Of course, for myself, whenever I'm trading micros, for example, I'm still looking at the NASDAQ chart, like the mini chart, because that's the asset that has the most volume, the most movement. So I want to focus on that one. But yes, my 3PD array stop would have definitely been in the correct area here. Just a 9-handle stop, definitely low movement in the PM session. But it's still offered for a lot of upside, so this is a great trade in my opinion. It's just a trade that did not work out and ended up making me go break even. Is that bad in any way? No. And right after, I mean, we did go back down and hit my partial. Did that hurt my soul? Yes, it definitely did. But that's part of trading. It is not a one-way street, all right? You give pieces of your soul to NASDAQ. You give your emotional space, I guess. I'm trying to find the right word for it. But what I'm actually trying to say is NASDAQ makes you suffer so that in exchange you can make money. That's how I see it. See it as a personal relationship with my asset. Yes, that's what happens when you become a specialist. NASDAQ is all I trade, so I take it personally when it fucks me over. Scary. Yeah, I guess. When you say it like that, definitely. But, I mean, we have the opportunity to be able to earn our living working an hour and a half a day. I mean, that's what I do when I trade pretty much. And when I have hard days, then I'm there for 5 hours and I'm making more than doctors. So I don't know what to tell you guys. It comes with sacrifice, but that sacrifice is worthwhile, in my opinion. Now, for our first peer review in a little bit, do we have any questions? I'd be more than happy to answer anything that could have occurred. And if there are questions about last week, I'm going to tell you guys bluntly, it was contract rollover week. It is a shit week. It is to be expected. But I'm happy to answer some questions. Add current day's range, shift breaker, time filter, review day model, again for expectation. Lovely. I love those little notes you did, NJ. That's great. I should have, what is the AI I use? I think it's Otter AI. Whenever I have meetings, it takes notes for me. I should do that for my PA reviews and post them in here. Good to have you back. Thank you, Magic. Appreciate you. Good to be back. Oh, I see you decided to get that Rice subscription, that Rice Statistics subscription after all. Hopefully, our tools and app has been treating you well. I see some of you guys typing. I'm going to give you all a sec to send your messages. But I am extremely happy to be back, right? It is not in a bad way, but it is sort of an addiction to work, honestly. I am addicted to my work, and it makes me feel good to be back doing it, doing what I'm good at. So definitely happy to be back, happy to get back in the groove, but a little bit of catching up to do. So it's going to be a pretty intense week. Thank you all, always a pleasure. Want you to, I've gotten 2 fake profiles with your name asking me to go to their website. Wow. Yeah, to be honest with you, we ban about 2 to 3 fake accounts per week. Actually, it's been a little less bad recently, but we ban a lot of fake accounts. So the best way I can tell you to do this is if they are in the Discord, then it is me, right? It's that simple, but always double check. And as you might see from my profile, I will never DM you first. So if you get a DM from me, triple check it. And I say I will never DM you first, but sometimes I do. But basically, I never do, okay? And if I ask you to DM me, then I wait for your DM, right? So definitely be careful. guess that's a sign you've made it, Ollie. I mean, I guess I'll take it, but I wish they would leave. Ollie with only one L. There we go. There we go. Did you hit up the buffets? I did not actually. I really wanted to, but the people I were with, they didn't want to. So I decided not to go to the buffets alone. So I will have to go back to the buffets the next time I'm there. And there's definitely going to be a next time, just not anytime soon. That's for sure. But we hit up a bunch of great restaurants, did a lot of nightlife activities, and hit up all the casinos to see all the malls as well, all the nice shops. Did not buy anything too expensive. Did not blow my bank account in gambling. I did spend a shit ton at clubs though, but yeah, it was very awesome experience. Definitely something to recommend. But it is budget heavy, so be ready for it, guys. Stick to good restaurants. Well, we did a few for sure. Definitely was a very fun experience. And I mean, if you guys want to see some pictures, I'm probably going to start posting some stuff on Instagram. I really fucking hate doing that, but it is important as an online presence to show what I do. And I mean, yeah, if I want to at some point build this Rise brand to be bigger than what it is right now, and don't get me wrong, it's big enough now, but I want to take over, then I need to start showing what I do with my life, you know? So hopefully you guys enjoy that aspect as well. It will be available on my Instagram if ever you're curious, or actually for the new people wondering what the fuck I look like, you know, that is available there too. On that note, though, before I start rambling too much, I'm going to wish you all a great night. We're going to have 2 more PA reviews this week, tomorrow and on Thursday. So hopefully I will see you guys all there in numbers. It was great catching up. Definitely great to be back and excited to get back on with this trading week. Good luck trading tomorrow, guys. Bye.